Hello and welcome everyone into today's class of day 4, which is gonna be on Magnet's day trading strategy, also in trading strategy that I use every single day to manage my trades or just to, just I use it with support and resistance as the confidence too to hold on to my trades for longer, especially when it comes to my holding my runners and my rest of the position when I'm initially I took out, let's say I took out half of the position first, and then I manage the rest of my position using these magnets every single day on almost every single play. So what I'm talking about is these magnets. It's called 5 and 8 exponential moving averages. I use every on every play. I will show you guys examples right here in a couple of minutes. But all you need to understand is, let's say this is a support zone uh, right here. I took my entry on that breakout. Right here, this is the breakout happened. And then I took my entry. If you guys remember from the day one, I also show you guys, I take my entry on this magnet support here as it, then it serves as a dual support for my long entry. Taking my entry on the support level, and then as long as magnets are holding below the price, I'm gonna stay in the trade, and and vice versa. If I'm playing the short, if magnets are above my price, I'm gonna stay in the short as long as the magnets are holding, right? So now let's look at some of the examples. Yeah, look at SPY. Again, guys, this is not gonna work when price is sideways or anything. You need to be priced to break out of a key level. That's this is a range right here. It's most likely not going to work in the range when price is sideways. But when market is trending down or trending up, then that's when it and really helps you manage the trade nicely on your runners or just overall position. Mm. Let's say we're watching, this is a support zone that I'm waiting to a break. Price broke down, retested this level, and then I'm gonna pull out my magnet, which is gonna be 5 and 8. Let me, so right here, so price broke down, retested this level, and I'm gonna add on the magnets. As soon as I add it on the magnets, price is staying below the magnets, I'm gonna stay in the position. It's pretty simple. And then price broke down, stayed below it, retesting it. Sometimes I also play it. Let's say I missed my entry, but I now there is no support on I'm watching. But if it's a trend day, price is trending down, and the next support is pretty far away, but I'm not getting any good entries. Then I watch the magnets pull back to get my entries. If you look at it right here, I'm gonna show you the replays, which make more sense. So price turned down, retested the magnets, pulled back, and then every single time it was pulling back to the magnets, it was getting sold back down to the prior swing lows on 50-minute time frame. So now you ask me, how would you take your entries on this one if you already missed it? It's pretty simple. It's pretty simple. The way that you want to take your entries using this magnet. I know most people out there, they use magnets, not the magnets, but the ribbons out there to trade. But the ribbons, do not provide you the exact entry, or you don't know where the price is going to reverse. But when you use this one in combination with 50-minute time frame or 30-minute time frame, then it gives you a sniper entries like here. But again, guys, you need to understand when you're trading this one, let's say the price is going down and it's pulling back up. As soon as it's going to the magnets, the candle's going to be green. You need to take the entries on the green candles if you're short, and then you need to take the long entries on the red candles as the magnet price is pulling to the magnets. So, just example of this candle right here, 250 minute candle are green, and then this third one is also was also green, but then it started wicking. This is where would you take the entry when it starts know, hitting this level on if let's say this next candle is closing above this magnet, then that you can use as a stop loss, or you can use the prior highs or prior lows as your stop loss when taking these entries. This is only to when you missed a player, when you just want to scalp it, or it's a trend day and price is coming down and you're not going to get entry back on the retest of your initial level. This can serve as a really good entry and exit points to your place. How it can serve as a good exit point is, uh, let's say this is support, and then this is where to give entry on that retest here on the support breakdown. Acted as the resistance. This is where to give your entry, and the price instantly dumped a lot to the downside, but magnets did not catch up, because now at that point, as I told you guys earlier, that these magnets are going to act as a magnet to the price. That means price is going to come back to these magnets. Either price is going to come back to the magnets, or price is going to go sideways, and then the magnet is going to catch up, and then it's going to reject again, and I'm going to dump again. So one of the best setups out there that you want to look at on a daily, on a intraday time frame is, let's say you missed the dump, price is going down, you missed the dump, and it started bear flagging into the magnets. These are the magnets coming down, then it started bear flagging into the magnets. Could be 15 minutes or 30 minutes. I try to use 15 or 30 minutes, a combination in together when I'm using the strategy bear flag or any kind of a bear or a bull pattern into the magnets to take my entries. So 30 minutes, provides really good entries on that. We'll take a good example on Rivian today, right? And then you guys, will know what I'm talking about. North Sea Rivian chart. You know, Look at this. Okay, looking at 30 minutes. Price was going down a lot today on Rivian. Let's say if there's no way, no, Rivian gave an entry in this candle or this candle, but what happened is it waited for the magnets to to touch, and then it went sideways for a couple hours. Right here, it went sideways for a couple hours, and then when it tagged these 30-minute magnets, I mean more sellers came in. They were waiting to short at an average price. Now the average, they met the average price. The price came to the average. It rejected, formed its bear flag. This is where you would take the sniper entry on, and then this was also a nice resistance level formed. So now there is a dual confluence of taking the trade short on Rivian on the magnet retest and at the resistance right here with it targeting new lows. So as you can see, price tried to come back up in the last 30 minutes and came up and rejected. So most likely the trend is gonna be intact until tomorrow, unless these price closing above these magnets or closing above the prior highs. Right. And that was the only reason I held on to my trade on Rivian the other day, which went I think almost 200%. Yes. So in the model, if you look, price gap down, and then back to back, three dot candles. What happened? Price was really far away from the magnets. Mm, The replace button right here. Price was really far away from the magnets when the candle closed. So I'm like, there is a lot of gap in between the magnet, with the mean price. Price is gonna go back to the mean, or price is gonna go sideways. And then what happened is price went sideways on Rivian. Price went sideways, and then what happened? Formed another bear flag. It was Tuesday. Found another bear flag into these magnets, and then dumped back again. Giving you a really nice second entry, or if you're holding runners, and then give you confidence that there is no reason to sell because the intraday trend is still intact. Another example on XOM, that the reason that it did not sell XOM this whole time, looking at 30-minute chart right here, price was pretty far away when this 30-minute candle closed. So that means it was a time for price to go sideways after this a nice dump, and then magnets to catch up, and then those who missed the entry on intraday time frame, the seller is going to sell back at the magnets again. Yeah, look at here, 30-minute candle closed at 8 o'clock, and then the magnets are pretty high up here. So I do not want to go short, or I do not want to stay in my full size when I know this mean price is pretty far away, and then we can quickly have a snapback rallies back to the magnets, or we can go sideways, burn the premiums. So I only want to stay in my runners, or if I miss the play, I'm gonna wait for the magnets to catch up. Now, as you can see, it price went sideways for some time, and then what happened? Price formed this bear flag into this magnets and then rejected again this morning, or even and then it closed, below the magnets, rejected it, and then came down. And then this whole day today, price, wanted to go up, but the trend was still intact, so there was no reason to, for me to sell my runners. So I'm still in my runners on XOM. Devian, another good example, same as XOM, that price gap down big, sideways, rejected by magnets, and then coming down. So pretty easy, to see uh, if price is trending down or price is trending up. So now we have this range on DVN. Let's say this 30-minute range we have. So if price is staying in this range, that means price is going to chop or under the magnets. As soon as we break out this level, which is 43, 44, and then retesting it with the 500 magnet support, and then I'm going to ride that trend to the upside right here. This is a prior resistance level, probably my first take profit level. We break out of this one, then I have this is my second take profit level, and so on and so on. Right. So any questions so far? It's pretty simple to follow, but again, you need to have a set of rules that you learned from day one to day three to make this trade. So let's say you are trading on the bear flag, but you don't know where the bear flag is gonna end. Because I use EMAs, they move a little bit faster than the simple moving averages. So sometimes when I did back test on SMA, a couple of years ago, because when I was trying using SMAs, they were pretty slow, and then price would just not tag them, or sometimes close above, giving you the fake outs. So I use 500 exponential uh, on the 50-minute time frame. But again, guys, let's say if you're in a swing on the daily time frame, the reason if you look at SPY, I'll show you it works on every single time frame. It depends time frame you're trading. Looking at SPY daily chart, the reason that I'm short SPY today is also is that prices is still below the daily magnets 5 and 8. Price is trying to close above, for a long time, couldn't close above, couldn't close above right here. So there was easy shorts every single day as long as the price is staying below. And then today price tagged this daily magnets and then couldn't close above this whole time. And then why not, price is still trending down. So I'm going to take another shot. And then looking at my waves, they also showing that we can see one more dump on SPY. So I looked at daily chart, zoomed out, and then that's what I saw on daily time frame. Right, even 4 hours are still holding. Price going to close above. Price is still trending sideways on this, and also a 4 hour supply right here too. So a lot of confluences, right? But definitely can change. We have news coming out tomorrow morning, but I did like those to reward for my overnight shorts on SPY. It works on every single time frame on the weeklies, right? So let's say on the weeklies time frame, the price was trending sideways. Price trending sideways. As soon as we got a breakout of this prior highs, and then price any pullback to this level, they were buying up every pullback to this. No single candle closed below it. But when this candle closed below, this weekly candle closed below, then I was pretty sure that there are high chances we can continue dump. But this next week candle closed above. But then I used my smaller time frame analysis to just to stay with the trend. And then right now price is below the weekly magnet, so there are still chances that we can keep selling unless this weekly candle closing above, and then we start trending to the upside. Right. So there's a lot of confluence that you can have in using these magnets, but you really do not want to use this as your main strategy. It's just there to tell you if a trend is downside or trend is upside. Even let's say when you take your entries on a day trade, sometimes what can happen is, let's say, most of the time, let's say, price is trending down and these magnets are coming down, and then most of the time you want to buy the dip on it, and then you see a green candle coming to the magnet, and then most people buy that high of the green candle, but that is just a magnet retest from the bottom, and then the next candle is coming back down because the intraday trend is still down. So what you can do is wait for the 5 minute to or 50, let's say you're trading 50-minute time frame. You can wait for the 50-minute trend to change, and then wait for the magnets to go below the price, and then have a dual confluence with the magnet support, and then the prior swing highs or prior swing lows as your support and resistance to be and stay in the trend. Right? Pretty easy and basic stuff. Guys, again, just to let you know, it's not like these 500 popped up on my screen. I thought about it, but I did back test every single EMA out there. You talk about one to almost 20 or 15 EMA. I tried every single one of them, and then a 500, where I found a balance that we can trade intraday on basically any time frame. Could be 15 or 30, or even 5 minute time frame, if you like to, scalp nicely. But what I saw is 15 and 30 minutes, works perfectly on these 500 magnets, especially if you're trading intraday. And then I showed you guys a couple of examples too on this one, and how I trade, and then how I managed my trade, like DVN. It's up 650% on my runners. Just because of the magnets, prices under the magnet. XOM, I'm up 350% on my runners because price is still below the magnet. So as soon as price is closing above, I'm getting out, or price is, closing above the magnets and also changing the 50-minute trend, I'm getting out of my runners. So it's a really good tool to add to your current strategy, along with the higher low strategy that I told you yesterday. As any questions you guys have on this one, do let me know. Again, this is not gonna work. This is not gonna work when the price is sideways. Then you do not wanna look at it, and then because when you zoom out, you're probably gonna know if price is sideways or price is trending down. At that point, you do not even want to look at magnet, because no indicator works in a chop, or these are just out there just to manage your trade. So do not make it your core strategy. You're gonna lose money. Simple. Because the way you can identify a trend is pretty simple. Is, let's say, now we have a swing low. This is swing lows, and then this is swing highs, right? And then now price is trading in between. Now you know that you have a rejection here, and then you have a bounce here. So the price is somewhere here, right here. So this is where I do not want to take the trade, right? So what I can do is, now I know the magnet not going to work here because the price is in no man's land. We have a rejection here, and then we have a bounce here at that same point, and then now the price is in a range. So what I would do is I would wait for the price to break up. Use the same strategy that you learned on support and resistance. I think it was day one. Learn the same strategy on support and resistance. Wait for the price to break out, wait for the price to pull back to the magnets, and then get your entry, and then stay in the trend as long as price is holding above or below the trend. So now the price is no man's land. What I would do is I would wait for price to break the prior lows, or I would wait for price to break the prior highs on the retest, and with the magnet support, I will take my entries, and then I will just ride the trend to the upside, because you don't want to, I will show you, tons of examples right here on AMD. So now this is a lows, this is a high that you had, and the price rejected, closed under, and then now we made this highs right here. So as you know, as long as price is staying in this range, now you know you have highs, you have lows. As long as price is staying in this range, I'm not, trading using magnets because it could be a lot of fake outs on this. But as soon as price is gonna break out of this level, I'm gonna go into a smaller time frame. Then I'm gonna trade. Now let's look what happened in a smaller time frame. This range was setting up and then broke out. Look what happened after breaking out. Yeah, we got the magnet retest, and then as soon as the magnets were holding, we were going up, and then it met this prior resistance right here. Then it started rejecting, and what happened after is we got our highs right here, and then we got our lows. Let's say this is where you want to enter, and then this is where I would not enter because now I know I have my highs, and I have my lows. So if price is not breaking out of these zones, I'm not trading. So I mean, if staying in between, then I'm not trading, right? So price is staying below, no candles closing below, and then as soon as this candle closing below, and then we know it's trending. This is also formed a nice support here, breaking down, retesting it, and then bear flagging into these magnets, and then it's coming down, and then same with the upside, right? Again, the more you're going to use it, the more you're going to learn about it. You're not going to get perfect, just in one class. Back test it, with every single strategy that we talked about here, 15, 30-minute time frame, especially on a trend day. When we clearly know all names are trending, all ETFs are trending, but you miss the move, you wait for the price to come back to the mean, which is these magnets, and then take the trade. So, they will, keep you in the trend, and they will also, keep you in check that you do not want to enter early, or you just want to wait for a price to come back to the magnet, only then want to trade. Because what happens is most of the time, you know, let's say price is breaking down this level, this is the prior lows here, price is breaking down this lows here, and then I see this candle 15-minute closing way for from the magnets right here. Now I know this candle is closing below, like this was today, right? Yeah, this was today, and then closing below this prior lows, but closed it. But I'm not gonna go ahead and take that trade because the magnets are pretty far away. Two scenarios can happen: either price goes to the magnets or price goes sideways, right? In this scenario, the magnets are too far away, so that's why I did not take the trade in AMD this morning, because I was either gonna take a trade on the retest on the next candle, or anytime, yeah, somewhere, as long as pricing staying below this 10370 10173 level. And then what happened is price did came to this lows here, retested it with the magnets, and then dumped almost $1, probably gave a nice 20-30% on the trade, and then stayed below this level for almost half day, and then finally broke out, and then it broke, let's say if you're running a trade, this is your stop loss right there, and broke out above there, and then retested this level. As we know that this is called a fake out now, faked out right here, and then it started trending to the upside. So now it closed below this magnets today in near close, and then it also broke this uptrend too. Right. So how would I? Mhm. So how would I trade this one tomorrow? Is now price is looking at the structure here. Price is making this higher highs, higher lows, right? So if price is breaking this prior lows here tomorrow, then that means 50-minute trend is changed. I'm gonna go take a trade, go ahead and gonna take a trade on the retest with the magnet support, with the magnet resistance, and then gonna ride the trend to the downside. Pretty easy. I'm telling you, I've been following this strategy since day one. I'm profitable, so yeah, I'm just not making it up. This is what if my OG mentees and then OG members, they know that I use this every single day, and then I already made it. If you are in a premium, I have made a video about it, an hour long. This was my first ever video I recorded on the magnets too. So if you're in a premium, go ahead, watch it. This is where where I explained it even better, I guess, at that level, because now I don't use it much. on when I day trade or stuff, because now I look at more supply and demand, but they are still there all the time to guide me through the trades, to just to look at my runners, or if I missed a trade. Yes, 15, 30 minutes that you want to look at. Let's look at some of the more examples. And then, there was nothing, more I could, I can tell you about it, but that's the main thing. And then it works on every single time frame. Like, let's look at monthly. Let's look at SPY monthly time frame to see how it works out. That's every single drop, every single drop to the magnet, you were getting, it was getting bought up. Every single drop. And then, even now, look at it. Price went sideways. Price went sideways here for a couple months, and then at that point, you don't want to stay in the monthly trend, because monthly trend is sideways. But as soon as this range broke out, every single drop to this magnet, they were getting bought up. Even this one, in August, came back all the way to the magnet and then bounced. But this last week, September, the first time we closed below the max. Now, if we look at monthly time frame, which means the monthly trend is to the downside, is this these magnets are curling down, prices below, and then price did try to close above the magnets but got rejected on the monthly 5 and 8 magnets. So which suggests is that as long as we below this level, I might just have a short bias. But unless, let's say, price is closing above this 431.70 level, then maybe then I can switch my bias to the long side, with the target of this supply zone that had formed, going back there on the monthly time frame. Again, guys, let's say it's a month end, and then you want to see where the price is at. One thing that you can, yeah, you can see is, just gives them basic idea, is that, let's say, the monthly candles close at the highs right here. Let's say this monthly candle closing at the highs, and then, but the magnets are far away. The magnets are far, because all these wicks that you are seeing, they were red. These were red monthly candles. At that point, all these wicks, all these wicks that you see, they were red. But there's a daily magnets, saved them and then pushed back up on the monthly time frame. But what you can see here, the point here is that price is closing at the highs, and it's going to work at the same way as they work in a smaller time frame. They're going to act as a magnet to the price. They're going to price is going to act towards it. And then look what happened. Price close at the highs, it's going to test the magnets. Come back in the next month. If bulls are strong enough, we'll get a bounce. If not, we'll get a close below, and then the bears are in control every single month. Right here. Right here, price closed way far from the magnets in June 2020, and then we got a nice bounce up to the magnets. Price never closed above the magnets, so the price was bearish. And then in September, closed all the way to the downside, even though it was 52-week lows, price was below, but it was far away from the magnets, and then instantly pushed back to the magnet, and then we finally closed above the magnet, and then it's just trending up from there. And then now, first time, I think, after since December, we're getting this close below the magnets, and then it starts to curl down too. So once we get across, that means things are about to get real fun for the bears, right? So if we got a cross of 5 and 8, that means there are high chance now it's a bear cross. Price can come trending down. I want to show you guys another strategy. See, this next strategy, this next strategy is called bearish and bullish crossovers on daily time frame or on the time frame, because I do not use it. it's just there. I probably never used it in a really long time, but it's a good way to keep you in check that if the trend is bullish or bearish. We can take a look at an hourly time frame. Is I just simply look at 8 and 21 Magnum's crossovers right here. One happened here, the crossover happened. That means 8 and 21 is crossing below. That means there is no reason for me to be bullish here. I'm just gonna stay bearish as long as this bearish cross is in play. Mm. Again, same thing, guys. Same thing. It's not gonna work. When price is chopping sideways, it's only gonna work when price is trending down or trending up. Looking at 1 hour right now, price is still sideways. We did get a cross here, and then price trend to the downside, but price was just sideways here. And then right now, price trying to cross above, but if we don't get a cross, that means there are high chances that we can still dump onto the downside, right? And then here we got a bullish cross right here. We got a bullish cross, price is trending up. Again, it's not accurate. It's not accurate, but if it's already in play, then what you can do is you can wait for it to have a bullish crossover. But most of the time, by the time the crossover happens, you're already late in your entries. But let's say if this is something happens on a bigger time frame, then I would take it much serious than on a smaller time frame. Because looking at a daily time frame, looking at daily time frame, it probably does not happen often. We got this first crossover of 8 and 21 after this range break. So that was a pretty solid signal for most of the longs out there that would now a bigger time frame is below the smaller time frame. Now we got the cross. This is called golden cross, and then crossed above, and then price is trending up. And then now this is where we got the bearish crossover. It's called death cross right here. When candle closed below, that means as long as the next cross is not happening, the bears are gonna keep on shorting every single pop on this time frame. And right here we got a bullish crossover uh, in a month or two, and then prices just keep trending up after that. So there was no reason to short the pops on the daily time frame. That means if it is not happening, that means that the bearish crossover is not happening on a daily time frame. The bulls are gonna stay in control, right? And then very less crosses, but works out perfect again. Not gonna work in a sideways market, right? And looking at weekly, the alerts gonna be even lesser, but uh, gonna be more, I would say, accurate. On the weekly time frame, we got our first cross right here. This is where I went mega bearish in the stock market. And then look what happened right here. We sold every single pop. And then I think this was my second year of trading. And this was the first ever signal I saw when I traded. And then I was pretty sure that if on 1 hour if this crosses happens, then I know what happens. It's very rare on the weekly time frame. I did back test a lot, and then I found there was one before the COVID on the weekly time frame, and there was one right before the 2018 drop, and then there was one back here, when our price again dumped in 2016. So basically, before any big dump, 8 and 21 do cross on the weekly time frame. But this the same thing is happening right now. Uh, Let me see if I can show you guys right here on the weekly time frame. So weekly candle is closing in like what tomorrow's gonna close weekly candle. So if next weekly candle opens and then we have a cross on the weekly time frame, which is obviously a very rare signal, which this is going to be a second cross uh, right after this one. So it's going to be a significant signal for the bears that now on the weekly time frame, the magnets, we have a death cross. That means I would not go long on on any pop unless I see this crossing back up or price is closing above the weekly magnets. If that makes sense, right? So we are very near to cross this one on the SPY on the weekly time frame. If I show you at XLF, XLF already got a nice death cross signal on the weekly time frame. That's why all these bank names they are dumping so hard because now on the weekly time frame we have a bearish signal. Right here we crossed it, not a lot of times, but only once here at all-time highs, and then once a bullish cross and the price went higher a lot. We got another cross here where all these banks collapsed, and then now we're getting it again. Uh, and we also have a bear flag breakdown on it too. So definitely banks are very weak. I will try to short it every single pop on it, and I do expect new lows on banks as long as this bearish cross is there. Really good question, guys. Is so after the death cross on the weekly time frame, what would be the good point to enter what puts? Would be switching to 30-minute time frame and entry and magnets? It really depends. Then you're gonna use, let's say, on the weekly time frame. That means you're trading the weekly time frame, and then what you want is price to come back to the weekly magnets, right? Now let's open this weekly magnets here, then turn it on. So the good entry level would be, let's say for a swing. Now you're trading the weekly time frame. Is now we have this breakdown, this uptrend breakdown right here, and then but the prices on the weekly time frame is pretty far away from these magnets. So I would take my entry for this swing. If I'm trading the weekly time frame, I want this price to go to the weekly magnets, retesting it, and then come down, because this is what happens, guys. Every single time, you look at this, price was way far from the weekly magnets. Look what happened. We got a nice bounce back to the weekly magnets, and then you watch the structure on the daily time frame. So I go back to the daily time frame or 4 hour right here in this scenario. Now I know the price is death cross is on the weekly time frame. But how would I trade it? Is price is still, the daily trend is still intact, and then daily max is still intact. Then I would wait, because let's say if you're trading weekly time frame, what's going to happen is um, you need to guys think like this on every single time frame. The way that I told you about yesterday about higher highs and higher lows is when you're looking at the weekly time frame, as price is going up on the daily time frame, and or the 4 hour time frame is going to start making higher highs and higher lows. So even though this is a weekly zone right here, right, price is going to make higher highs and higher lows on the weekly, even though weekly is still down. And then what what you're gonna do is, what how I would do is, let's say I know weekly trend is down, and then I'm gonna wait for the daily trend to break, and then start making lower lows and lower highs. This is where I would take my entries on the daily time frame using the weekly magnets. Stop loss at prior swing highs and prior swing lows. Same thing with the daily magnets. Now I know price is below the magnets, or prices just in general is downtrending, but I want to take my entries using the daily time frame. Then I'm going to go to, let's say, an hourly time frame or 4 hour. 4 hour would be same as daily, but let's say I go to I'm going to trading a daily time frame. I'm going to go into hourly time frame, but as price is going up to the magnets, price is going to trending up, higher high and higher lows. I do not want to short the top. What I would do is I would go in a smaller time frame, which is hourly, and the daily I would wait for the trend to change on hourly time frame, breaking this prior lows, confirming that the daily trend is still intact, price is rejecting the magnet, and also made a new trend on the hourly time frame, which is lower lows and lower highs. Price broke this prior lows, entry on that pullback, with a 50% or 60% retracement, stop loss at this prior swing highs. So that's how I would trade trade back to the magnets as prices going back, and wait for the trend to change, and then I will take my entry. Again, guys, this is gonna take time. This is definitely gonna take time. This is advanced stuff, and you're not gonna learn. Keep on saying it. I can show you tons of examples. I can go back, on these magnets or on higher and higher lows, because this stuff gonna look great right here on the left side. But as you're gonna trade on the right side, that's when you're gonna learn more on your own, rather than just watching these videos. Even if you watch it, 100 times, you're not going to learn it. You need to go out there, test it or watch it as it happens every single day. Only then you're going to become more and more confident in in these all these strategies, or taking your own trades using these strategies. So one suggestion is for you guys is, even though, let's say market is sideways, then and you are a beginner, you don't know, you don't have a strategy, you're still making one. You can, you now you have these videos, or you have my YouTube, and what you can do is you can just watch the price action on that particular day. Do not take a trade. Sit in front of your screen for 8 hours. Watch the price action, how how these magnets are acting on a different stocks. How higher lows and higher lows are forming on a smaller time frame, and then how the trend is changing from smaller to bigger time frames. Starting from 15 to hourly, to 4 hour, to daily, to weekly, right? Once you understand it better, and once you get perfect in identifying the trend, once you're starting to have an edge, then you're gonna be enough confidence and gonna have enough patience to take the trades on your own, using the same exact strategy that I teach you guys here. Mm. And then I guess you need to chart those 200 names on the watch list every single day. And then I will link the I will link my trading views. I think I almost have like almost 200 charts I have, like including all the ETFs and small caps, and the other names. I chart them every single day. I never miss a day. Even when I'm on a vacation, I take my iPad or my laptop with me, just to chart, to see where the market is at. I don't want to miss a day, where I'm not charting the names, and the next day I'm coming to the market, I don't know what's happening. And then it's just now, in my routine. And, before, it used to take me like 2 hours just to, chart them all. But now it's only taking me 20 to 25 minutes to chart 200 names. So do it every day. You're gonna get really better, in marking levels, identifying highs, lows, identifying what's in a trend. Again, if you're gonna chart 200 charts in a day, you will get also a basic sense that where the market is at right now, where the where the energy sector is at, where is the cruise lines are, where the tech is at, where the banks are, and then what sectors I'm gonna be playing tomorrow. Let's say you said overall market is bullish, and then you look at all these 200 names, all these ETFs, and then you found out, all right, these 10 names are looking bullish going into tomorrow, and the market is bullish too, and market is in uptrending. These names are also looking strong, so I'm only going to focus on these 8 to 10 names going into tomorrow, and only going to trade these uptrend. And then that way, you're gonna build a lot of confidence, and just by charting all these names every single day. But again, you need to have a discipline to do it every single day. Only then the market is gonna reward you for your work. Right? I will link those later, today, with all the videos in the recordings section. So far, we've been recording for almost 40-45 minutes. Any more questions, guys, for today? Do let me know. Do let me know if you understood it. Let me know too. So I should stop talking. All right. Um. So I guess, guys, that's it for today. I'll catch you guys tomorrow. Hope you guys learned something new today. If you did, um, then I'll see you guys tomorrow in the live. Have a good day, everyone. Enjoy your day.